Hey everyone, welcome back to another episode of Accounting Explained by AccountTutor.com. Imagine this: you have been working hard to build your business, but how do you know if it's truly profitable? How can you measure whether your efforts are paying off? Well, the answer lies in one of the most important financial statements every business owner needs to understand: the profit and loss account, also known as the income statement. It's your business's financial report card, and in this episode we are breaking it down so you can see exactly how well your business is performing over time. The profit and loss account is structured into two main sections: income and expenses. The income section records the money your business has earned during the period, while the expenses section lists the costs associated with earning that income. The bottom line, or net profit, is determined by subtracting the total expenses from the total income. This statement is crucial because it helps you understand if your business is financially healthy, making profits, or losing money. The income or revenue part of the profit and loss account is where you record all the money your business has earned from its core activities. For example, if you run a cafe, the money you make from selling coffee, pastries, and other items is your income. It's important to note that income is recorded when it is earned, not when the cash is actually received. So even if your customers have not paid yet, as long as the product or service has been delivered, the income is recognized. This practice, called accrual accounting, helps businesses match income with the expenses incurred to generate that income. This ensures that your financial statements accurately reflect the business's performance, regardless of when the money actually changes hands. Next, we have expenses, which represent the costs your business incurs to generate income. These expenses can be divided into different categories. One of the first is cost of goods sold, also known as COGS, which is the direct cost of producing or purchasing the products your business sells. For instance, if you were running a bakery, the cost of flour, sugar, and labor used to bake the pastries would be part of your COGS. These are considered direct costs because they are directly related to producing the goods that you sell. In addition to COGS, there are operating expenses, which include the day-to-day costs required to run the business, like rent, utilities, salaries, and marketing expenses. These are not directly tied to the production of goods or services, but they are necessary to keep the business functioning. Finally, businesses often have non-operating expenses, such as interest paid on loans, which do not relate to the core business activities, but still impact profitability. Now, let's look at how all of this comes together in a simple example. Imagine you run a small bakery, and over the course of the month, your income from pastry sales and coffee amounts to $15,000. Your direct costs, such as flour, sugar, and labor, total $4,000. On top of that, you have other expenses like rent, which is $1,000, salaries amounting to $3,000, utilities at $500, and marketing costs of $500. When you add up all of these expenses, the total comes to $9,000. To find your net profit, you subtract the total expenses from the total income. So your net profit would be $15,000 in income minus $9,000 in expenses, which gives you $6,000. This means your bakery made a net profit of $6,000 for the month. The profit and loss account is an incredibly valuable tool for understanding the financial performance of your business. It tells you whether you are making a profit or a loss and helps you identify areas where you can potentially cut costs or increase revenue. Regularly reviewing your profit and loss statement allows you to make informed decisions, whether it's adjusting prices, managing expenses more effectively, or identifying opportunities for growth. If this video helped you understand how the profit and loss account works, be sure to give it a thumbs up, subscribe to our channel, and check out AccountTutor.com for more detailed accounting resources and training. We will see you in the next episode, where we will dive into another essential concept for bookkeepers and business owners. Until then, keep learning and growing.